Everyone anticipated skyrocketing tax rates in 2026. However, new rules bring better news than expected. This video will explain exactly what you need to know about the 2026 tax bracket changes. The big picture is, there is no tax cliff. The One Big Beautiful Bill Act made the current 7-bracket structure permanent, meaning the previous expiration of the Tax Cuts and Jobs Act rates at the end of 2025 is no longer an issue. Tax rates, up to 37%, stayed the same. The thresholds for income ranges moved upward to account for inflation, preventing bracket creep. This means a cost of living raise won't automatically push you into a higher tax bracket. Here are the new 2026 tax brackets. These are 7 progressive rates, maxing out at 37%. Remember that you only pay each rate on the income within that specific tier, not on all your earnings. A key threshold to know is the 22% bracket. For single filers, the 22% bracket now starts at $50,401. For married couples filing jointly, the 22% bracket doesn't kick in until $100,801. The standard deduction got a big bump. Inflation pushed the standard deduction significantly higher for 2026, offering the easiest way for many to lower their tax bill. The 2026 standard deduction amounts are $16,100 for single filers, $24,150 for a head of household, and $32,200 for married couples filing jointly. This means a married couple earning $100,000 deducts $32,200 off the top. Beyond the brackets, there are 2 major updates. These changes include a senior deduction for 65-plus taxpayers and SALT relief raising the deduction limit to $40,400. These updates significantly benefit retirees and homeowners in high-tax states. If you are 65 or older, a temporary bonus deduction applies for 2026. Single filers get an extra $6,000 deduction, and married couples get an extra $12,000 deduction. This is a huge win for middle-income retirees, although it phases out for higher earners. The SALT cap, or state and local tax deduction, was capped at $10,000 for years. For 2026, the cap jumps to $40,400 for most filers. If you own a home or pay high state income taxes, your itemized deductions are now much more valuable. Most households will benefit from taking the automatic standard deduction. However, if you have significant mortgage interest, high state taxes, or large charitable contributions, itemizing may save you more, even with the higher standard deduction. Progressive taxation means your effective tax rate is blended. Falling into the 24% bracket does not mean you pay 24% on all income, but only on the portion of income within that specific tier. These changes mean you are protected from bracket creep, and larger standard deductions give higher take-home potential. Homeowners also benefit more, as the higher SALT cap makes itemizing worthwhile in high-tax states. Middle-income earners and married couples benefit from inflation-adjusted brackets and the $32,200 standard deduction. Retirees 65-plus benefit from the new bonus deduction, and high-tax state residents see improved itemized deductions with the $40,400 SALT cap. Your action steps now. Find your bracket using the 2026 table. Compare deduction strategies to calculate your best option. Plan for seniors and SALT deductions if applicable. Finally, consult a CPA to tailor these changes to your specific situation. Tax laws are complicated, but you don't have to navigate them alone. From an 18-year CPA perspective, the 2026 changes are largely good news for most taxpayers. Getting the right guidance ensures you capture every benefit available to you. Coming up next, we will offer more deep dives, including new gift tax limits and what the updated thresholds mean for estate planning. We will also cover Secure 2.0 changes, detailing the key retirement account updates every saver needs to know. For a quick reference on the 2026 key numbers, this table shows the new standard deductions, the SALT cap, and where the 22% and 37% tax rates begin for single and married filing jointly statuses. Join the conversation. Which tax bracket do you fall into this year? And are you planning to take the standard deduction or itemize in 2026? Drop a comment below, and be sure to like and subscribe so you don't miss upcoming videos. Our key takeaways. No tax cliff means rates didn't go up. We see higher standard deductions, $32,200 for married filers. Lastly, seniors and homeowners win with the new senior deduction and the SALT cap rising to $40,400.